Ladies and gentlemen, welcome to Woodburn Accountants and Advisors webinar series on choosing a location in China. In this webinar series, we will be reflecting each day of this week, except Friday, in relation to the complexities surrounding finding and choosing an office space, a factory space in China. In today's session, we will be looking at the foreign investment laws and regulations and how this can affect also choosing your location in China. I'm very, very pleased to have Caroline Della Sega, or Della Sega, I hope I'm pronouncing that right, I'll let her pronounce it again later, from Knight and Frank, who will be also speaking on Tuesday and Thursday of this week about the types of options that are available to people. And I'm very excited for Thursday's session, which is really a deep dive into the Shanghai market in terms of finding a location, choosing a location, and understanding a little bit more the dynamics that are surrounding that. But before we start today's webinar session, I always have a couple of slides of admin. So just for your reference, for those of you that are based in regions that are a little bit restricted, such as the Middle East and China, you may find that using the GoToWebinar system will require you to utilize a VPN. This will just give you a little added stability. You have an option on the GoToWebinar system to either use your computer audio or to use a landline. The option is yours. You may find with the computer audio that there are a couple of static issues or technical difficulties. It is always safer to go on the landline if necessary. If you do choose to use the landline, when you click on it in the audio section, you will get a dial-in number, access code, and an audio pin, and then you will connect to the system. As is very typical with our webinars, we try to aim to have a 5, 10, 15-minute Q&A, depending on the length of the presentation. So please use this opportunity. This is a complimentary webinar series. Use this opportunity this week to ask Caroline, ask myself questions, provide comments, and we will be very happy to answer them. We may not have time to do it live during the webinar, but we will certainly come back to you after the sessions are done. So use the questions section in the control panel, comments, questions, whatever you like, add them in, and we will be getting back to you. In regards to the technical difficulties, this is an online system. Internet is never safe or stable. So please be aware, if I do get disconnected, it will be for no longer than 30 seconds to 45 seconds. Don't exit the webinar. I will be returning to complete the webinar session unless there is a true difficulty with my online system, but that hasn't happened in quite a couple of years. So I think we're pretty stable there. Now, just to see if you are all able to listen to me, if you are all actually listening to me, then perhaps you could click on the hand button, which is in your control panel. That will give me the signal as you're all muted to know that you're listening in. Thank you very much for those that have clicked it. You can unclick it and it will disappear from your control panel as well. So let's get started on with today's presentation, which is looking at the new foreign investment law and how it impacts foreign investors starting from January 1st, 2020. I have been in the Chinese market, where I relocated to Shanghai in 2003, and over the last 16 years, I have seen dramatic changes, all for the better, in my opinion, in relation to foreign investment law. And this is now just the next jump to improve matters, which I say it improve matters on paper. We will have to look and see how it actually comes into fruition. But this is exciting times in terms of the new foreign investment law. And my aim in today's session is to explain what it means to you in layman's terms. What does it mean if you're looking to go into the market? What does it mean if you are already in the market? And ultimately, what does it mean if you are looking for a place to base your business in China? That will be the goal for today's session. Now, I see a lot of new names today, so I just want to give a very brief introduction to who we are. Our firm is called Woodburn Accountants and Advisors. We are specialized in inbound investment into China and Hong Kong, which ultimately means that 100% of our clients are foreign investors that are going into these two jurisdictions. We try to provide our clients with a full one-stop shop approach to their corporate services needs, which is everything from pre-investment advisory, market entry, and then all the implementation and ongoing administrative and compliance services, which most people don't enjoy doing. We do that for you in China. All of our clients are in different sectors, services, and industries. They are all focused on entering the Asian market, and they can be doing anything from manufacturing in the region to selling into the region, exporting from the region, or even providing a wide variety of services in the region as well. A little bit about myself. So I'm the speaker for today. My name is Christina Kola-Coluccia. At least you get a bit of a picture to the voice. I have been in the corporate services sector since 2003 when I first arrived back to Hong Kong, where I'm originally from, and then I quickly moved on to Shanghai in December 2003. So I've been in this industry for about 16 years. I've learned a lot about doing business in China. My expertise is on helping foreign investors going into the Chinese market. And I'm going to now let Caroline introduce herself, because Caroline is going to be the moderator for today's session and for the Q&A session. Caroline?
Hi everyone, and thanks, Christina. Thank you. I'm Caroline de la Sega, and yeah, you pronounced my name well. Thank you. I'm from Knight Frank. I've worked in the real estate sector for over 14 years. I've worked in the UK, all across Europe, in Singapore, and in China. I first came to Shanghai in around 2011, and I've been working advising institutional investors and developers, occupiers on real estate strategy. I had a brief spell back in the UK across European capital markets, doing some cross-border transactions, but I returned about a year ago to China via Singapore as well. So my experience sort of covers anything really from valuation, development, consultancy, portfolio strategy, market entry, leasing, and capital markets. So it's pretty much everything across the real estate spectrum there. And yeah, thank you for having me. I'll tell you a little bit about Knight Frank. We are the largest independent global real estate services firm in the world. We've got 19,000 people across all the key markets that you might expect. There's maybe some that you might not. We're headquartered in London, but we've been in Greater China for over 40 years. We have offices in Shanghai, in Beijing, in Guangzhou, Hong Kong, Taipei, Macau, and we recently opened in Shenzhen as well. From China, we cover all aspects of commercial real estate across the life cycle, from site selection, disposals, leasing, valuation, project management, and also the capital markets transactions. And we also do residential project marketing and sales from China. So thank you for having me. I'm very happy to be here today to moderate the Q&A discussion with Christina. And as Christina mentioned, I'll be presenting tomorrow as well, and on Thursday on some of the real estate related aspects of running your business in China and setting up here. So I hope you can also join then. But
thanks,
otherwise,
Caroline.
We'll pass over. Yeah, thank you, Christina.
Thank
you can take it away. Thank you.
Thank you. So let's get cracking on today's presentation. This is the agenda that I will be going through. But let's start off with the basics. Many of you that are online today are from the industry and the sector, but there are also quite a few firms and companies that probably aren't too familiar. They've heard about the foreign investment law, but they haven't necessarily understood or read all of the articles that have been published on this. So let me just give you a brief understanding of what you need to know about the foreign investment law. So on March 15th, 2019, the National People's Congress approved the new foreign investment law in China, which will come into force on January 1st, 2020. And it's going to replace and update all of China's various existing laws related to foreign direct investment and foreign invested entities into one single and unified law. Now, I'm extremely excited by this for the main reason that when I meet companies, there is tremendous confusion about what is a WIE, what is a FICE, what is an FIE, what are the differences? When you add then joint venture in there, what is an equity, what is a cooperative, there are so many questions about what are all of these terms and terminology being used. And ultimately, what I tell clients is, let's get rid of that terminology. What you're going to be doing is setting up a limited liability company, and the ownership is foreign. Simple as that. Now, I'm extremely excited because the foreign investment law will go under one single unified law, meaning that all of these other laws about WIEs and FICEs and joint ventures will be eradicated, removed. They're all going to be now consolidated under one law, which is the company law. And ultimately, what this company law is telling you is you are setting up a limited liability company when you invest in China. Simple as that. Complexities are all going away. We will stop talking about WIEs and FICEs finally because it brings so much confusion, and we will very simply be talking about limited liability companies. Oh, I'm so relieved. So this is something that I'm very, very excited about. Ultimately, what the government is trying to do in terms of this new foreign investment law is promote foreign investment into China. They're not trying to eradicate it. They're actually trying to promote it, and they're trying to make things a lot easier. Now, for those of you that are very new to the market, I want to tell you, when I arrived in China in 2003 and 2004, and you went through the complexities of setting up a company in China, it was tough. In those days, to set up a simple trading organization in China owned by a foreign investor, it took at least 12 months. Times have certainly changed. Things are much more transparent, are much more structured. Now, are they as easy as in Hong Kong? No, they still are not. But compared to 2003, 2004, there have been huge improvements in regards to corporate services and corporate functions in the Chinese market. I just want to emphasize that because a lot of people don't realize these changes that have developed. So what does this new foreign investment law mean in terms of opportunities? So since the foreign investment law was approved, basically the Chinese government has continued to emphasize its commitment to further opening up the economy to foreign investors, especially in sectors that were restricted. So things like value-added telecommunications, education, culture, medical services, mining, transportation, all of these things are becoming more and more open to foreign investors. There are also a lot of amendments to existing legislation that will actually, well, the government is working really hard to make sure these will all come into fruition starting January 1st, 2020. China's principal agencies regulating foreign direct investment, which is the National Development and Reform Commission, as well as the Ministry of Commerce. Everyone's heard, I'm sure, if you've been Googling about how to set up a company in China, you've heard of the MOFCOM. This is the Ministry of Commerce. They have all been busy also formulating updates to regulations that will guide the implementation process of the foreign investment law and encourage foreign direct investment into China. Now, what is very interesting this year is that by June 30th, 2019, two things happened on that day. The first is that the negative list, which I'll explain what that is, the negative list was updated, reducing the number of sectors and industries that are still restricted or prohibited in China. And number two, they updated the catalog of encouraged industries for foreign investors, adding on additional industries that they're trying to promote in the region. So these two things happened on June 30th. These two important things are still key to anybody who is looking to invest in the Chinese market. And now they have this foreign investment law that is coming into fruition. So what does the foreign investment look like under the FIL? I'm going to use the abbreviation FIL from now on. FIL is the foreign investment law. So the establishment, well, basically, when you look at the articles within this legislation, the second article, Article 2, defines foreign investment as being direct as well as indirect activities occurring in China by foreign individuals, enterprises, or other organizations. Now, what is very key to understand is that it is still unsure what indirect means. There is no clear definition of what indirect means. All of the points that are listed on this slide really refer very much to direct investments, whether it will be investing directly within an entity as an independent organization, whether it'll be joint ventures, whether it'll be mergers and acquisitions. And I really, really love how the Chinese government has written number 4, which is any investment in any other manner as stipulated by a law or regulation by the State Council. So that's pretty vague and can mean a lot of different things. So when it comes to the indirect side of things, that's probably where clause number 4 will come into fruition, where it will be done on a case-to-case basis. Now, there are still a lot of industries that are restricted and prohibited that I will detail in terms of the negative list. So in order to be able to facilitate investments that are in these sectors or industries, what a lot of foreign investors have done is used special purpose vehicles or VIE vehicles, which are variable interest entities. What this basically means, in short, is that you are utilizing a Chinese individual or a Chinese organization who will establish an entity that on paper is owned by them, but is indirectly controlled by the foreign investor. Okay, I hope I've simplified it compared to what's written on the slide, because it is something that's a little bit difficult to completely understand. And I'm going to use a case study here. In the past, I had a client who has a very large e-commerce website in China. Back in those days, it was restricted for foreign investors. So what they did is they used the employee, an employee in the US had a cousin in Shanghai who registered the ICP license for this website, had his own company, and basically made sure that the website was constantly online. That was his main function, and he got paid a monthly fee for doing that. The control, I guess you could say the control of that website, so the back end operation of that website was done out of the US. Eventually at some point, so this is kind of what is a VIE vehicle, okay? It's the website itself was indirectly owned by the US, on paper was owned by this Chinese individual, and it was then handled all that. Now, all of this is great to a certain extent until you want to get ownership, but that's not the point for today's discussion. The point is, will VIE vehicles still be applicable or possible for those of you that are in sectors that are restricted or prohibited? Now, there is no clear definition. On the 1st of November, there were draft implementation procedures that came out. They did specify a little bit more about indirect control and ownership of structures in China. I'm not going to go into too much detail about that because this November 1st draft implementation is open for comments, meaning that there could be changes to it. So I want to stick to what came out in March and then wait to see what happens in January 1st, 2020. But ultimately, if you are an investor that is seeking to get into the Chinese market in a restricted or prohibited sector, and you are thinking about a VIE structure, be careful and evaluate the risks and potentially see what happens in January to understand more if you can avoid such a structure or not. And if not, then how can you protect yourself under the new laws and legislations? Now, one thing that you have to keep in mind, everyone, especially for those of you that are looking to go into the Chinese market, and this is where choosing your location will come into play. There is something that is called the negative list. So I'm going to reference in this webinar presentation about the 2019 negative list, because there have been a number of updates that have occurred throughout the years, and I'm going to reflect primarily on the latest version. The negative list is a list of industries that are negative to foreign investors, meaning that they are prohibited or they are restricted to foreign investors. This negative list is getting shorter and shorter over the years, okay? What I want to mention here that is very key is that basically under the national treatment, under the foreign investment law, in theory, and I say in theory because there hasn't been an implementation yet, all foreign investors and their investments will be treated exactly like Chinese investors and their investments, meaning there will be equal access and a complete fair playing field. Now, I'm also suspicious. For those of you that were wondering, I'm also wondering how this is all going to pan out and work out. But I'm optimistic. I'm generally a very optimistic person. And I am very curious to see how this implementation will actually occur starting January 1st, 2020. But in theory, everything will be a fair playing field. Under the new foreign investment law, any foreign investor, Chinese investor, same rights, same procedures to set up a company, same corporate structures. You will have the same rights in terms of currency conversions and repatriating funds. You will have the same protection in terms of IP. Everything will be the same. Okay. Now, again, let's put it this way. I'm very curious to see how this will come into actual implementation. But this is what the foreign investment law is stating. Now, if you are under the negative list, this is not what's going to happen because you are still in an industry that is restricted or prohibited. Okay, so in that regard, you will still have to follow the rules and regulations associated with the negative list. Okay, so that's a separate law in itself. But I just want to give you some stats from the 2019 negative list, which again, I think are very optimistic and very positive. So the first one is that they've reduced the number of restricted sectors from 45 to 37 in the meaning in the free trade zones, and then from 48 to 40 outside of the free trade zone. Now, this is why I wanted to bring this topic into this whole webinar series of choosing a location in China, because depending on the industry and sector you are in, you may find better benefits for you to be inside a free trade zone versus outside a free trade zone. That analysis has to occur in the pre-investment stage. Okay? You have to know what you want to do in China. You have to know in what sector you are going to be in. You should be writing bullet points of the activities you want to perform and the products or services you're going to be dealing in. You need to research whether that is within the negative list or not. And then you need to understand whether you are going to have to go in a free trade zone or not. This will then dictate your whole China investment. All right. So this is the main reason why I wanted to bring this topic into this whole webinar series about the new foreign investment laws. If you are in a very, I want to say normal, but yeah, in a normal industry and sector, for example, you are in retail of garments. You have your own brand, you're a designer, and you want to sell your garments in China. This is a normal industry and sector. There is nothing requiring you to be in the free trade zone, but you should still make the analysis to see whether the free trade zone has better options for you or not. This is there's a lot of information on this slide, but basically what I wanted to show you is changes that have occurred in certain sectors and industries within the 2019 negative list, and what changes have occurred in them, which basically mean that these sectors and industries can now actually set up their companies outside of the free trade zones. Meaning, for those of you that are in these industries and sectors, and right now you are in a free trade zone, you will have the ability to actually set up outside of the free trade zone if you wish. Just a minor thing, I'm going to be sending out copies of this presentation, so if you weren't able to read every single item on the previous slide, which I'm sure many of you weren't, you will be getting a copy so that you can read it in more detail. The 2019 negative list also provides certain restrictions on maximum percentage of foreign ownership, as well as on the number of joint ventures that a foreign investor may invest in within certain industries. So to give you a couple of examples, the restriction on foreign shareholding in the automobile manufacturing sector, other than special purpose vehicles or new energy vehicles, will be phased out in 2020. Restriction on the number of equity joint ventures manufacturing in the same line of automobiles will also be phased out by 2022. The restriction on foreign shareholding in securities, futures, or life insurance will also be phased out in about 2021. So now, not all of you are going to be in these sectors. And obviously, and I'm hoping that this presentation is pointing something out, the foreign investment law is really geared, or what the changes that it will impose, as well as the negative list, you are looking at industries and sectors that are very high profile, right? You are looking, if you look at the previous slide, you're looking at oil and gas, mining, manufacturing of automobiles, and very large organizations, right? You're looking at infrastructure, agriculture. You're looking at big projects. I mean, in the entertainment sector, you're looking at things about constructing movie theaters and the operation of movie theaters. This is not necessarily geared to small, medium-sized companies that are potentially supplying these big guys, okay? Or your small, medium-sized companies that are just looking to do e-commerce. So my main goal from this presentation is also to show you that the foreign investment law is not necessarily nitpicking the small, medium-sized foreign investors that are going into China. From a structural perspective, yes, but the advantages are really geared more to the joint venture structures that are existing in China and for those bigger organizations. Another thing that I just want to highlight, because these are changes that are occurring within the free trade zone, there were two changes that were made again in June within the 2019 negative list in relation to fishery industry and sector, as well as in public. So there are consistently changes that are occurring and updates that are being made within the negative list. And you might have some years where there's just one change, or there could be that there are 2 to 3 changes that occur within a year. Now, as I said, there were two things that changed June 30th. There was the negative list and there was the encouraged industries catalog. So the encouraged industries catalog provides important guidance for foreign investors, and it offers tax as well as other types of incentives as a means to promote foreign investment in encouraged sectors and in underdeveloped regions. So the first half of the catalog, it usually sets out 13 broad sectors where foreign investment is encouraged countrywide on a national basis. The second half sets out separate lists covering 22 different less developed regions across central, western, and northeastern China, and the incentives that you can obtain from them. So what's interesting now is that the 2019 catalog has 67 new sectors, tremendous, 67 new sectors within it that are encouraged for foreign investors. And for the regional catalog, there are 54 new sectors. So the sectors where there's huge promotion would be anything that is new and high tech, environmental, primarily, following the industries that are kind of encouraged within the 5-year plan. But obviously the biggest things right now would be 5G components, integrated circuits, chip packaging, cloud computing, all of these types of things, because obviously the main goal is to get 5G out in China, and they are looking for foreign investors that can help with that. So, what's the aim, obviously, of the Encouraged Industries catalog? And I'm kind of summing it up here. It was mentioned by an NDRC official on June 30th, and I just kind of want to highlight here. So basically, they have tariffs that are exempted when you import your own equipment. You have income tax rates in regions, like I said, central, western, northeastern, that are at a rate of 15%, meaning profits taxes at a rate of 15%. And you will also have priority on land. And you will also get discounts basically on pricing of the land, if that is something that you would need. Now, promotion and protection of foreign investors under the FIL. I think this is something that is very big for most foreign investors that are going into China. So what are they? Well, basically the promoting measures and policies are outlined very briefly on this slide. Basically, we all know that in the past there were special economic zones. Now they have the the free trade zones, and they are all following the negative lists and the encouraged catalogs. So you've got to look at those first in order to understand what the process is. It's basically a step-by-step process so that foreign investors in the restricted and prohibited sectors can first go in the free trade zone as a testing ground, and then eventually move out into nationwide establishment. The other is being offered financing tools to foreign investors, whether it comes from securities, stocks, bonds, etc. The third one is something, again, where I'm not sure how this is going to play out, but it's guaranteeing, it's the word that they've used, a fair market competition. So we'll see how that pans out starting January 1st, 2019. I don't know how that is going to come into fruition in terms of guaranteeing fair market competition. I think it's a very large, big aim for the Chinese government. And we will see. I think in the end of the day, when you bid for a project, it could very well be that the person who's looking at all of these bids, he just prefers to work with a Chinese company versus a foreign one, and it's not really a fair market sentiment there. So we'll see how this comes into play over time. So some of the key provisions in terms of protection for foreign investment. So the first one is no expropriation. For those of you who don't know what that means, because English isn't your first language, it means basically that there will be no seizures, meaning they will not take your assets just like that, which has happened in the past. There will be a legal process. There will be fair and reasonable compensation. You will be paid in a timely manner. It will be a proper legal process. Nobody can just seize your assets, okay? They might do it in situations of national interest or public interest, but again, it's a legal process that they have to go through. The second one is pretty also important for those of you that want to bring technology into China. Nobody is going to force you to do a transfer. Nobody is going to, again, seize your technology. It's going to be negotiated freely. There will be administrative measures that are guiding any form of technology transfer. It has also been said that government authorities and officials will keep confidential any trade secrets obtained from foreign investors. And I assume it's also a situation that is vice versa. Foreign investors will also have to keep confidential any trade secrets that they obtain from Chinese companies. And I think the last point is obviously something that is very critical, because I get asked this You can't imagine how often. Free cross-border flow of capital, profits, capital gains, etc. This is something where I get asked a lot, you know, can I get my money out? How can I get my money out? Can I get my money out in renminbi versus foreign currency if there is a lack of forex? You know, all of these questions pop up. So under the new FIL, one of the key provisions is this free cross-border flow. Now, again, implementing that will be extremely interesting because there are a variety of channels that you need to communicate this to, and updates will have to be made in their own policies. And I'm talking about the State Administration of Foreign Exchange as well as the banks. So all of these things are not something that will come just out of the blue. There are a lot of, it's not just following the implementation guidelines by the government. Banks have to update their policies. All of these third parties have to update their policies according to the new laws and regulations of the FIL, and this will only take time. It's not something that's going to happen overnight. So this is why I very clearly state, don't get too excited yet. You know, there are, obviously, the FIL will lay the groundwork. They will have implementation guidelines hopefully coming out January 1st, 2020. Right now, they've published the draft of the implementations as of November 1st. There have to be comments put on that. We are now already at November 18th. So, you know, there's 6 weeks to go before the end of the year. Let's see what actually comes into fruition. Do not expect things to change immediately on January 1st, 2020, which is probably why the government has also created a transition phase for existing FIEs. And I think that these are very generous transition periods. So if you are an existing foreign invested company in China, a joint venture, a WIE, a FICE, whatever structure you might have, you have 5 years to transition your structure in China and modify it. They will then have a grace period of 6 months, and then in phase 3, we'll see what actually pops up. They've indicated there'll be a rejection of registration for those that haven't done the modifications. But again, you know, looking in 5 years, who knows what updates might actually occur in terms of this whole transition period. But I think it is very generous and very realistic to say there is a 5-year transition period for existing entities that are in China. So why do you think that it's taken so long, or why do you think they're giving such a long period? From my perspective, it's the following, right? I mean, if all of you know, Beijing is the one that comes out with all the regulations. They have to then filter and create draft implementation structures for every city, every region, every municipality, every province, and that filters down. It all takes time. And as I said, we're November 18th right now. And don't forget, you are going from the existing foreign invested enterprise laws into one unified company law. And what I can immediately imagine is if, for example, in Shanghai, it comes out the draft implementation regulations for Shanghai, and then you have to go to every single district. So Huangpu district, Jing'an district, Pudong district, Jiading, you know, for all of these districts to get things understood and correct and right, it's going to take a long time, which is why I believe they have given this 5-year transition period. So navigating the transition period, just a couple of the key changes that I think are important for those of you that have existing companies in China, and also for those of you that are looking to go into China. So again, in terms of the form of our organization, if you are a company already registered in China, you might be an equity joint venture, you might be a cooperative joint venture, you might be a wholly owned foreign, you know, a WIE, you might be a FICE, and you're all under right now these foreign invested enterprise laws. And after January 1st, 2020, any new company established will just simply be a limited liability company under the company law. That's it. Very, very simple. And you basically then have 5 years to convert, which means you need to update your articles of association to update your structure, okay? So in the articles of association of any company in China that is a foreign invested enterprise, you immediately show in the first paragraph of your AOA what laws you are abiding to. And this has to be immediately updated and changed. Now, what I will find interesting is really the details. So will there be an update on business scopes? Will there be an update on other aspects within the AOA? So one other aspect will be the corporate governance, which will change. It won't change dramatically. It will just change in terms of who has the highest power of authority. So when you have a joint venture in China, the highest power of authority is usually the board of directors, not the shareholders. And from my understanding, this will now be changed to the shareholders having the highest power of authority and decisions being made by the shareholders directly. How this will come again into fruition in terms of discussions and board meetings and all of that will be very interesting. But that's another change that will have to be updated for joint venture structures. Another thing that will disappear, which is point 3, which is the thin capital rules, which again, I'm quite happy about, is that in China, you've got registered capital, which is the capital that you are injecting into the bank account in China to utilize as your working capital to pay off all of your startup expenses. When you register your company, you have 2 numbers that you need to indicate. One is your registered capital amount and one is the total investment amount. Generally speaking, there is a difference between the 2 numbers. So you might have your registered capital as 1 million renminbi or 100,000 US dollars, and you might have your total investment being about 140, 150, 160,000 US dollars. And there's a ratio that you have to abide by, et cetera, et cetera. The total investment component is going to be removed, which means that currently you are only, the shareholding company is only allowed to inject the difference between the registered capital and total investment. Now you will be able to borrow directly from the shareholder. Huge liberty and flexibility available. So that's great. So I think it's wonderful that the total investment amount will be removed. Again, how that's physically going to work and how the banks are going to deal with that, as well as the State Administration of Foreign Exchange, is to be seen. And lastly, just something again I find quite interesting is in relation to transfer restrictions. So currently under the VIE laws, the Foreign Investment Enterprise laws, any proposed transfer of registered capital within an equity joint venture is subject to the consent of a non-transferring party. Under the company law, the transfer by a shareholder of a limited liability company will be subject to the other shareholders' statutory right of first refusal. So again, articles of association have to be updated. So what are the next steps? To conclude with today's presentation, basically, if you are already established in China, what does it mean? If you are a simple trading company, consulting company, and there's only one foreign invested shareholder, what you need to do is look at your articles of association come January 1st, 2020, and see what needs to be updated within that and file an application within 5 years to make sure that the update is done. If you are a joint venture structure, and again, I think this is why they have put this 5-year transition period, you will have to review your JV contracts as well as your articles of association, which means that terms and conditions may need to be negotiated, need to be decided upon, which can all take time, and there might be numerous board meetings to go through all of that. So these are the 2 things that you have to do depending on what type of structure you already have. For those of you that are new entrants, new market entrants, if I were you, if you are looking to incorporate right now, I would probably wait until Jan 1st to submit your documentation so that you abide by the company law and that you don't have to then make any changes. I say this because currently, if you've got all your documents ready to go for submission, you can get your business license before December 31st for sure. So, but it just means that you will be abiding by the foreign investment enterprise laws versus then the company law, which will come out January 1st, 2020. So you may want to wait off on that just until that date. Obviously, if you're on a time constraint, don't wait. Depends on what stage you're at. If you are in the pre-investment stage, really look. I mean, the two things you should be looking at is the negative list and the encouraged industries catalog. Look at those two things to understand what you can do in China and where you can do it. Because ultimately, this will then provide you with insight as to where you are allowed to set up in China, and where you can actually be located. And at that same time, utilize that period of time to also look at, what kind of Chinese name do you want, look at your business scope, look at your corporate structure, etc., to understand a little bit more about the pre-investment stage. But definitely look at those two documents to understand what you can do. So we've ended the presentation there. Caroline, maybe I can leave you with any other questions that have come in.
Yeah, hi, thanks, Christina. And yeah, that's a really useful overview. I think there's obviously a lot of changes coming up, but thanks for guidance in how we're going to navigate it. Just looking at some of the questions. Right, how do you think that communication in the future is going to be between foreign investors and the Chinese government? Do you see any changes coming up with the new law?
So again, this will be something that's quite interesting because obviously now most foreign investors have certain lines that they go through that are specific pertaining to them. They obviously talk in different ways to the Chinese officers. Obviously now with a more fair playing field and being now grouped together with the Chinese domestic companies, I'm not sure how communication will actually be. I don't know if it's going to be more chaotic. I don't know if there are going to be longer queues and lines at the various government offices. I don't know if certain bureaus will then be eradicated because they've only been geared to foreign investors. Again, these are all things that will be very interesting to see come Jan 1st, 2020, and within the first 6 months to see what will happen. It's also very hard to generalize what communication will be because I think every city, every district has its own communication format with the various government offices. And I say that particularly with the various tax bureaus. So it's hard to generalize. I don't think it's going to be easier. I think initially it's going to be harder because the officers will be confused themselves how to deal with everything. Mm-hmm. Until there are, clear procedures and guidelines that are put in place.
Yeah, as in they'll also be navigating the changes at the same time, so it might be a bit more tricky. I think, same from the real estate perspective when you go to new zones. But obviously, still one of the key criteria is FDI, like that's their KPI basically for various government zones. So I think that they're still going to have a target towards attracting foreign investors. And as you've explained through, I think at the start, this whole law is to encourage foreign investment. So hopefully there might still be some particular channels of communication that are more particular for the foreign investors.
I mean, what I can certainly imagine is that, and this exists even today, is that in particular zones or districts, you'll probably still have these promotion bureaus, which are geared to foreign direct investors. So, that might be initially in the pre-investment stage, the avenue where you communicate and you talk about your investment. But what happens once you're actually registered, that's to be seen in terms of how that's going to turn out.
We'll have to see. I think, one of there's a follow-up question as well that they're asking, will the government authorities change as well? As in, is there a different plans for different reporting lines from the government structure? Or?
So that's a really good question, and I'm actually not privy to that information in terms of whether there will be hierarchy changes, whether there will be reporting changes. what I think will be very interesting is that you might find a downsize of government offices because everyone is on the same page now. All companies are on the same page. So what I will find interesting is for those that are new to the market and looking to establish, will the pile of applications for foreign investors be in the same pile as the domestic Chinese companies? Does that mean then that also incorporation timelines will increase versus decrease? These are all things I'm not sure how that's going to pan out. Even with tax officers and tax bureaus, you generally are appointed a tax officer who is familiar with working with foreign invested companies. So how's that going to change now with your tax officers? Are you going to start working with other types of individuals who aren't familiar with foreign investment structures? Again, these are all things that will be interesting to see over the next 6 months, how that's going to pan out.
Yeah, definitely. Okay, so there's a question from David. Over next year in 2020, do we continue to do the typical annual compliance procedures?
So that's also a very good question. Well, for those of you who aren't familiar with what annual compliance procedures are, so when you finish in China, a fiscal year is January to December, which means that come January 2020, you have to start doing your annual compliance procedures, which is year-end audits, annual tax filings, annual inspections, etc. These are all procedures actually geared to all types of companies. Even Chinese companies have to do year-end audits. So let's very much simplify the process, make the assumption that yes, everything remains the same in terms of approximate deadlines, procedures, and documentation that needs to be submitted. And the reason why I say that is because it's everything associated with 2019. Remember, this regulation, the new foreign investment law is coming out in January 1st, 2020. So it's starting for that fiscal year. So it'll be interesting to see for 2021 whether there'll be any changes. But I believe, and no news has been published in regards to what will happen for 2019. So let's keep it on that everything will remain the same.
Are we? I'll sort of throw in the follow-up questions for myself. But are we expecting any further updates? So are there still sort of certain regulations that they hadn't confirmed sort of in the last that they said that would change next year and TBC following the consultations and implementations?
So, I mean, November 1st came out the draft implementation procedures, and they are asking for comments from the public for that. So there could very well be changes. It's just, it's November 18th. So I don't know how many changes there really could be that are made because they're so adamant about starting January 1st, 2020. So I think the assumption is that what is written is what will go. But again, the full implementation processes have to be published. And so they will either be published right before New Year or on Jan 1.
Okay, yeah, so not long. Yeah,
not long.
We'll find out. No, that's great. I think was one thing that you mentioned that you said comes a lot of questions that you get regarding the I suppose repatriating of profits and capital. I think that's also quite relevant for us from the real estate perspective. Companies looking to divest, maybe sort of monetize their own assets, getting the money out. So the laws currently are quite restrictive, I think, or just quite lengthy. Do we think that there's going to be, or what kind of processes are they going to have to make that easier? Is there any indication of how that might change?
That's a good question. I mean, again, when you talk about physical changes, the implementation laws haven't been published yet. So right now you're looking at a law from its overview, right? How it's going to be physically then brought into life, that's still not issued. So whether things are going to be easier, more difficult, I'll tell you this, every time a law has come out and you've had the implementation guidelines, from my perspective, there's always been this period of a quarter to 2 quarters where there was chaos. And I say chaos because people didn't know how, the government officers just didn't know how to do it. Nobody, you have to imagine you're training an entire country with an overall law. So it takes time, it takes patience. And, I actually would expect delays initially until things get a bit easier. I remember when the online systems came up for incorporating entities in China, and the first few months that the online systems came up and you had to submit all documents online first, we couldn't even upload the documents because we had to use a software system that was expired. So, there are a lot of things that will run into difficulties initially. So let's see how that turns out.
Yeah, but I think overall, this is great news. I think for everyone, and I know from our perspective as well. It's that start of the process. It's opening up. There's the intention there to make a level playing field, as you say. Yeah. However, that might actually be implemented is yet to be seen. But the intention is there, which can only be beneficial for all of us, trying to do business in China. Right. And as you say, once we navigate the transition period, those first quarter, second quarter. Right.
I think currently in the state of the world where there is a U.S.-China trade war, this new foreign investment law is a great initiative to show the world that China is trying to make things better for foreign investors. They are trying to protect brands. They are securing more laws and legislations to protect the foreign investors that are coming into the country, and also to find those organizations, those IP squatters or whomever that are stealing things from the foreign investors. So, they have great intentions. They're trying. And I think in the state of the world, this is a great initiative that's popping up now.
Yeah, and I think I just read an article just recently actually, that the FDI inflow into China has increased 6.5% in the first 3 quarters of this year. So even in the face of trade tensions, etc., there's still investment coming in. It's grown on last year. Yeah, and especially I think I read in the high-tech industries. So I think almost 40% year-on-year growth. So as you say, following those encouraged industries, it's obviously having that effect to increase investment into the country. Right. Yeah.
Well, I think we're going to leave it. We're going to leave it there because we've only got a couple minutes till the 1 hour. We hit the 1 hour time frame. So for those of you that have asked questions, I will revert back to you as soon as the webinar is over. Please note that a copy of the presentation as well as the recording will be given to everybody that has registered for the event. If you are interested to talk and you want to talk about your strategy, feel free to reach out to me. The details are on the presentation. Again, if you want to talk to Caroline as well, she will be more than readily available to speak to you as well. If you enjoyed this session and you would like to subscribe to our weekly newsletter, please do. It's free of charge. You can find it on our homepage, or you can follow myself or our company on the various social media sites that we're on. So please don't forget, if you haven't registered yet, tomorrow Caroline will be talking about selecting your location in China. We'll be talking on Wednesday about the legal and tax consequences of selecting your location in China. And then on Thursday, we'll be doing a market deep dive into Shanghai and all of the real estate intricacies. I don't like to use that word, but that are occurring there. You can register on our events page on our website if you haven't done so already. So Caroline, thank you for moderating for today's session.
Thank you. Thanks for having me.
And thank you to everyone who attended today. Have a great afternoon and evening. Goodbye.